I started my journey in basically with no connections in Silicon Valley whatsoever. We got a lot of attention very quickly because we kind of zigged when everyone else was zagged. New York Times wrote about us, TechCrunch wrote about us, and we started having people asking us if they...
I hate to use the word greed, but like a lot of founders are just like, oh, like we need to raise at 10 million, 20 million.
That was really the biggest thing that changed. But I think that there's a lot unsaid about the situation. It made sense to take a shot at that, at building a very nice cash flowing asset for myself.
Welcome to episode 12 of Fundraising Demystified, the podcast where we uncover the untold stories of startup founders who have raised capital to bring their visions to life. Join me, Jason Kirby, as I interview these founders and dive into the hidden truths of how they got funded. Today, on episode 12, we have Michael Houck joining us, the former CEO and founder of Launchhouse that raised $22 million from investors like A16Z. We dive into how he built his investor network from scratch, navigated a difficult public PR crisis, and leveraged his audience to launch his next venture, starting with just a newsletter. Let's go ahead and get started. Hey, everyone. Thanks for joining us. Your host, Jason Kirby, Fundraising Demystified. Today, we have Michael Houck on with us today.
Hey, man.
Hey, thanks for joining us. I'm a member of your community. I was a member of your previous community at Launchhouse. I'm so stoked to have you on the show and just learn about your journey of raising capital from A16Z at Launchhouse, what happened there, and your overall founder journey overall. So I would love for you just to kind of give some background to the audience, a little bit about you and kind of how you started your entrepreneurial journey, and then we'll go from there.
Yeah, absolutely. Super stoked to be on here. Thanks for having me. I think for me, I started my journey in basically with no connections in Silicon Valley whatsoever. Grew up on the East Coast of Philadelphia, ended up working at a small startup as an engineer, and then sort of cold emailed my way into a role pretty early on at Uber Eats, helped grow that business, small part of that, big story. Did everything from operations to data science to building products, then jumped over to Airbnb, where I was a product manager for a year and a half, helped build Airbnb Plus. After I got laid off during COVID, because our product was about going in person to people's homes. You couldn't do that during COVID. I started Launchhouse. Basically, I had been looking to be around other people during the height of the pandemic. And rather than quarantining my apartment, I booked a co-living house in Tulum and convinced somehow 18 other early stage explorer founders to come live with me for a month. And it ended up becoming this incredible journey over the course of almost 3 years, where we went on to raise from A16Z and we raised a venture fund and did all this incredible stuff. And yeah, that's kind of how I got into it in the first place.
just raised some money from A16Z, you raised a fund, no big deal. I definitely want to start there. I know where you're at right now with your community, but as far as what this podcast is all about, is kind of sharing those insights. It sounds like you did not come from, kind of a well-connected Silicon Valley family or network or school, and you kind of forced your way in there by, kind of building relationships cold and going from there. But let's start with Tulum. So you established this kind of entrepreneurial co-living environment, which, I'm no stranger to. I've seen those, when I was kind of early in my entrepreneurial career, and found them to be super valuable. I still have a lot of friends doing those types of things, especially single, no kids. Makes it a little easier. Let's kind of talk about, okay, you established something interesting in Tulum. Now, what's the birth of Launchhouse and the capital raise, and what was that journey through the subsequent raises?
Yeah, I mean, Launchhouse wasn't even supposed to be a company when we started it, right? Who became my co-founder and I were working on a totally separate idea, and we were going to build it together at Launchhouse. And Launchhouse was supposed to be an experiment for 1 month where we bring people together. But when we got down there, I think people were really interested in what we were doing because everyone else was, again, quarantining at their homes at the time. And we were down there living in Tulum with a group of founders making content, posting on Instagram and Twitter. And so it naturally got a lot of attention. New York Times wrote about us, TechCrunch wrote about us. And we started having people asking us if they were going to join and when the next house was, and, if we were incubating companies and all this stuff. And at that point, we realized the momentum for this idea of like a new type of institution, a new type of community for founders in this like remote work friendly world was an opportunity that had a lot of momentum behind it. And so we just followed that, and we abandoned what we've been working on before, brought on a third co-founder as well, and just went all in on it within the next few months. We ran a second house in Tulum, where we ran like an actual application process, and then came to LA, rented a house that the previous tenant had been Paris Hilton for 3 months. We put over $200K of our own money just on the line to rent that house for the 3 months. We didn't really have a plan. We were just like, we're going to fill it up with founders. We're going to fill it up with incredible people that we know and help them build things. And we're going to see what happens with it and try to make our money back. And so that's kind of how it got started.
So, for founders, I deal with a lot of founders, and they always kind of wonder, like, how do companies just magically raise money overnight? And what I'm hearing, though, is you had a lot of momentum going for you and a lot of attention. It sounds like probably from just a unique concept and a very desperate time for people that, were hungry for human connection and engagement, in addition to your target audience also was your target funders and, capital allocators and things of that sort. So I guess, you put $200K of your own money on the line, bold move. What happened after that? And like, what were some of the metrics that you hit with Launch House, with the Paris Hilton house, to, eventually raising capital?
Yeah. I mean, to get it, one thing you said there, we got a lot of attention very quickly because we kind of zigged when everyone else was zagging, right? People were just naturally interested in what we were doing. So the momentum grew organically, and we leaned into it, right? We cultivated the hype, we cultivated the attention, because we knew if Launch House was going to succeed, it needed to have that cool factor, it needed to have that idea of like a new take on an old idea, right? The old hacker house, the old idea of Silicon Valley being just in Palo Alto and then just in San Francisco. Now it could be anywhere. That idea, that concept could happen anywhere. So we needed to build something for that. We got to LA, we started bringing people into the house. I probably interviewed, 200 or 300 people in that December before we kicked things off in January. And we ran it for 3 months. We lived there during those 3 months. I was there off and on because I'm based in New York, but my co-founders were there full time. Basically at the end of those 3 months, we had brought about 100 people together into this community. They'd paid us for this experience. And I should note, we had actually tried to raise money before that a little bit, or at least we'd considered it. This was back after we did the Tulum house, before we went to LA. We were trying to see how to fund the LA experience. And before we decided to do it ourselves, we explored like, hey, do we have enough to get anyone interested, right? And the answer was like definitively no. Because we just had run these 2 houses, and that was basically it. We talked with one person who wanted to take, a lot of the company for a very little amount of money. It just didn't make sense for us. So at that point, we put our money on the line. At the end of these months, we had started to get more attention. The caliber of people was only going up who was joining, and we kicked off a proper process at that point.
And was that your seed round that you guys were raising at that time?
Yeah, I mean, it's sort of like, I guess it was in between like a pre-seed and a traditional seed, right? It was a $3 million round, which, I mean, these days you could probably get away with as a seed, but back in, this is 2021, different times. So we called it a seed. We self-funded the pre-seed basically, and then this was our seed. And we brought in a couple high signal people early on, and then use that to build momentum for the round and close the rest of it pretty quickly. Happy to talk more about that.
Yeah, no, let's talk about like kind of what are the lessons learned, what you guys do, what made your capital raise unique. Granted, it was like, hot times, lots of froth, but there still could be some valuable lessons could be applied today. So great for you to share those. Yeah,
I mean, we knew that, the idea was, we hadn't even launched our subscription product yet, right? And so it was just one-time fees people were paying to join this community. And so we knew we needed high signal folks in early. And, thankfully between myself and my 2 co-founders, we built up a decent network for the last few years, previously in SF. And so our first investor was actually Balaji, and we were able to like talk about how Launch House could become like a network state, right? Like a future city of builders creating the incredible things powering the future. And we were excited about that idea. He was excited about it. So he was actually our first check-in. Once we had him involved, we were able to basically talk about how it was going to be this big thing, and Balaji was interested. He put money in, and other investors got interested at that point too. We did tranche our round. So Balaji was our first believer. So we gave him, we had him come in at a $5 million cap, and the end of the round was at 20. And that was like 2 months or 6 weeks, 6 weeks later, 6 weeks, 7 weeks later.
So you got a pretty sweet deal, 4x, paper return, yeah,
pretty good paper return for sure. But I mean, when you believe in someone early, I think it's worth giving folks a discount, especially when they bring a lot to the table like he did.
So that is something I want to like unpack a little bit, and I feel a lot of founders, they kind of get this mindset, especially I think it's some founders coming a little bit more down to earth, but I see some, like, I hate to use the word greed, but like a lot of founders are just like, oh, like we need to raise at 10 million, 20 million. They're like still too early to justify that. But when you're raising money, you want your investors to make money. You want them to be along in the journey. You want them to support you. You want them bragging that they have a 4x return in 6 weeks.
Yep.
And I think that's something that a lot of founders don't really realize. They get so hung up on valuation, dilution. It's like, well, you're not going to get anywhere without an army of support and excitement. So, you don't have to give away the farm. Like, you obviously turned down a previous investor, when the terms didn't make sense. And but when you got someone that can move the needle for you and or can create FOMO or credibility into your deal, it's not unreasonable to just sweeten the terms, for them.
Yeah, and he pushed our thinking too in some of those early conversations and made us think even bigger about the idea. So he brought a lot to the table for sure. Yeah.
And you kind of gave the bigger vision. I actually never heard that vision before, and it makes a lot of sense now when raising capital from, say, the A16Zs of the world. That takes that broader vision where anyone looking outside and not really knowing what's going on in those investor meetings would be like, it's a co-living house. Is this another Adam Newman type real estate turn tech type play? But it's you're essentially behind the scenes selling a much bigger vision that and that's more in lines with what the top tier one firms want to see. Is as practical as maybe your business might be, that practical is not what they're looking for. They're looking for what could be the moonshot, and are you the people to back on that front?
Yeah, 100%. The big market and being the right people to tackle it is definitely what folks are looking for, especially in those early, like the pre-seed or seed stage. So we felt that we were very fortunate that the way we were approaching it resonated with some great folks. And that continued as we grew. I think the value prop got more clear as we went towards the A. The A was later that year, and at that point, we had sort of solidified, we're going to raise a fund, and this is going to be structured in a very, very unique way where exposure to Launch House also gets you exposure to the fund. And that got investors like super excited.
Yeah. So walk us through what'd you raise in the seed?
So the seed was $3 million, a little bit over.
Yeah. So $3 million. And then what did you do between closing the seed and, kind of raising the A? What kind of gave you the momentum? What kind of metrics were you sharing and hitting?
Yeah, so when we closed the seed, we were just in LA, and we had just run at that point 5 cohorts, 3 in LA, 2 in Tulum. And between then, what we did is we expanded to New York. So we opened a place in Chelsea in New York. We started running experiences out of there, and also launched our subscription product. That was really the biggest thing that changed. We started having ARR come in. It grew really quickly. Just by running these cohorts, we were able to bring in a decent amount. We were charging $3,000 a year for our membership on top of the one-time fee to be part of the co-living experience. And so we had a lot of revenue coming in very quickly. I think that was exciting. We also then formulated plans to raise the venture fund at the beginning of 2022. Looking ahead a little bit, and the way that was structured was that the fund, actually the majority of the carry from the fund funnels back into like the Launch House Inc. entity, with my fellow GPs and I getting like a small slice of it, but the vast majority going to Launch House. So that, when you think about like long-term or short-term revenue, we were crushing it on short-term revenue from this co-living experience that we were running on top of it, and the potential for the long-term revenue if we were able to continually attract top-tier founders, which we had a good early track record of because of the branding that we built. The potential was pretty clear both in the short term and the long term.
And what kind of checks were you planning on writing, and how big of a fund did you raise?
Yeah, so the fund ended up being about $7 million, a little over $7 million, and we started out writing 100K checks. We ended up dropping that down to like usually 25 or 50K checks. We just changed our strategy between wanting to own more of the company versus wanting to take more shots on loan.
Gotcha. And did that coincide with the Series A? Was that separate of the Series A?
It was soon after the Series A.
Gotcha.
It was around the time we announced the Series A. We had started raising the fund at that point.
Gotcha. And so tell us about the A. What was the strategy to go to market? Was it already kind of pretty easy? Like, you already had term sheets coming your way? Like, what was it? What was the A like?
We actually weren't planning to raise the A when we did. We had a plan to wait a few more months before we even considered it, honestly. But we built such a strong connection with Andrew Chen at A16Z. He was one of our first 100 followers on Twitter back when we were in Tulum. He'd been following the project for quite a while. And after being in LA for about 6 months, we connected with him more closely and brought him out to the house to do a fireside chat, meet the community members. And the energy in the house was just very excited for it. He was super excited, and he left basically just jazzed on the vision of where we were going and also what we were currently building. We were trying to disrupt Y Combinator. We're trying to create like a new type of accelerator community for founders. So I think that vision was super exciting, especially based outside of San Francisco, where we could prove out that this can be done anywhere.
No, well said. So how much did you guys end up raising in the A?
It was about 12 in total, 10 of which came from A16Z.
Gotcha. So around 15 million in equity financing for Launch House, plus the 7 million, for the fund. So some sizable numbers, in a very short period of time. I remember, when all this was going down, there was a lot of excitement about you guys. There was a lot of press news, and you guys were crushing it on content. I actually read your newsletters when they came out. And so there's an incredible execution on community and content. So, obviously giving you guys credibility to grow and continue down that path. But, I kind of want to call out the elephant in the room. Launch House doesn't exist anymore. Outside of maybe just the newsletter. What happened?
Yeah, so technically Launch House does exist. Brett, my co-founder, is pivoting the company to work on something new.
Gotcha.
I left in December. We had a big PR crisis situation last September, ironically right after I launched my own newsletter, which was meant to be a side project for Launch House originally. Had a tough couple months working through that. Our investors were super supportive in the trenches with us, really fantastic to have their support and work with them. I don't want to talk too much about it, but I think that there's a lot unsaid about the situation that no matter how many folks will go on the record in your defense, if the press gets something they want to talk about, they're going to write about it. There's nothing you can really do about it. So we got through those tough couple months, reached December of 2022. And, basically I saw that, in my opinion, the brand was not recoverable. So decided to move on. I actually took a couple months basically off and went to Cape Town for the winter, just to enjoy some time after a couple years of grinding. Brett continued to work on the company, ended up shutting things down in March, so 3 months later. Very amicable. I was still involved, still advising, still part of the fund at that time. And then yeah, basically when I got back from Cape Town, decided to go all in on the newsletter because it had been growing so crazy on its own.
Yeah, no, I know. I think you're at like 45,000, 50,000 followers or subscribers on there. So it's pretty impressive. And, and looking back, I know there's certain things that can and cannot be, said about, the launch house situation, but it's good to hear that they're still, operating. I still get the newsletter, which, I thought was kind of confusing after, obviously reading the, what reporters were publishing online and, I'm not entirely sure as far as what was real, what wasn't, what was, what not, but, ultimately it sounded like, Launch House wasn't necessarily your future anymore, and you decided to kind of part ways and leverage basically what we're talking about before. Like you built an incredibly strong community, and now you're kind of doing it, but in a very different way. So let's kind of transition here from super high growth, wildly popular VC-backed company to now running an independent, self-funded, community. How did you come about going down this path, and kind of why?
Yeah, again, super accidental. Ironically, similar to the accidental, birth of Launch House, I'll say. For the newsletter, I started as a side project back last September. Kept it going through my time off over the winter, and basically it was just meant to be advice for founders, right? Like every week I'll answer a question that'll help founders, move faster, grow faster, make the right decisions about fundraising, whatever it might be. And so I started that then. It was meant to be a side project, basically get attention to Launch House, more content marketing, something we're very good at. But yeah, kept it going and went full time on it when I got back. Basically when I was in Cape Town, I had seen it continue to grow, and I talked to a bunch of my friends, guys like Saho Bloom, Lenny Rachitsky, who have built these big businesses that started as a newsletter, these big like solo, totally cell phone businesses. And I think due to having the relationships that I did now because of Launch House, and also just because of the audience that I'd been able to start to build up over the past few years, it made sense to like take a shot at building a very nice cash flowing asset for myself. I'd worked at Uber where the stock did not pop at IPO, and then I worked at Airbnb, but only for a short time, year and a half. And then Launch House didn't have the financial outcome, at least that we were hoping for. So for me, having a nice cash flowing asset that I can build for the next 5 or 10 years, grind in this initial stage, and then hopefully continue to grow it from there, seemed very appealing. So that's what I've been starting to set up. We're doing about $50K a month in revenue now from it, after basically zero when I started going full time in March. And just looking to continue to grow the community. I'm basically using the same mission of helping founders all around the world that I inspired me to build Launch House, and taking it to this new medium.
No, it's phenomenal. And I do want to ask, sorry, go back to Launch House real quick. Like you guys raised a large sum of capital, you moved on. There's still, it looks like life in the company as they're pivoting behind something, but yeah, as far as capital, was capital returned back to investors at any point, or what's the status of the fund?
Yeah, so we were super fortunate that our investors backed us, time and time again, and did not ask to return capital. So the company still has capital in it. That's what is being used to kind of take it in this new direction. The fund is still active, still investing. For me, when I got back and decided to work on the newsletter full time, I didn't want to be split in my attention between different things. So I decided to resign from the fund and just focus on what I'm doing now. But it's still active. My former partners are still working on it, still making investments, and would totally recommend founders to work with them.
Gotcha. That's great to hear. So launching a community, going from 0 to 50K a month in revenue, when 5 months, 4 months, is pretty massive. How did you kind of seed the launch of this? How did you get from 0 subscribers to 50,000 subscribers? Looks like you're monetizing a buck a month per subscriber. Not bad for a newsletter. And so kind of walk me through what would you leverage? What kind of tools, resources, lists? How did you go about growing this?
Yeah, I mean, having a social media following definitely helps, right? My following isn't huge, but it's enough to get started. I had, I think when I started going full time, I had like 20 something thousand on Twitter and 20 something thousand on LinkedIn. Now it's a little bit bigger than that. But having that was huge, because not only did that let me put out content that would drive subscribers in, but also it let me very clearly be able to like DM people and collaborate with them and recommend each other's newsletters or hype up each other's threads and things like that happen a lot in the DMs or in the WhatsApp groups or whatever. So that helped a lot. For me, content marketing has always just been something that I've leaned on, and that was true here. The dirty secret of the newsletter world, though, is that like of all the big newsletters, like the 1 million+ subscriber newsletters, they all get 90% of their subscribers from ads, like paid ads, right? So Facebook, Instagram, Twitter more recently, the ad platform has definitely improved. And then some people do TikTok. I don't do TikTok, but that's where a ton of growth has come from. You can acquire newsletter subscribers for well under $2 if your creative is on point and your audience targeting is on point. So I just invested some initial capital to do that. But in the early days, it was much more about content marketing and like recommendations and swaps with other newsletter creators, because I didn't want to invest too much before I kind of knew that this thing actually had legs.
No, that's fair. And look at those, LTV to CAC, numbers of if a subscribers are earning you $1 a month, I guess sponsorships, activations, affiliates, whatever it might be, you're making $12 a year and it's costing you $2. 6-to-1 ratio is. But any SaaS founder would love to, brag about those numbers raising capital. But the beauty of your business is it doesn't necessarily need capital to raise.
Yeah, I don't think it'd be able to raise capital if I went for it. Also, it's not like something I'm super interested in for this business in particular.
Yeah. And something what could be useful to founders listening to this, and something we can kind of unpack a little bit, is the importance of building a brand, and in this case, a personal brand that can go with you.
Right.
You kind of built Launch House, brand, but it coincided with your personal brand, allowing you to, once you kind of made the move, you separate yourself from Launch House. It's not like you can go and download that list. That's not, IP that you have, to do anything. You had to start from scratch, but because you had your own brand, you were able to kind of kickstart something relatively quickly.
Right.
And I'd be curious for you to kind of share any tips or recommendations for founders that, might kind of be, might be on the the early stages of, their personal brand or their company brand, and what advice you might give to them to have that ability to, take their followers with them.
Yeah, I mean, it's definitely something that I am glad that I did, for sure. I think that even if Launch House would have been a massive success indefinitely, I still would be glad that I invested in that. Because it gives you something that you can take with you, as you said. So for me, I would totally recommend people to form relationships, basically with other folks who are also interested in this, are also in their niche, and who have like a similar audience size, and then form a little group with them, grow together. Mr. Beast actually does this, or has done this since the early days of YouTube. It's one of the ways that he got started was he just studied YouTube and was in this group chat and got on these Zoom calls, or I think Skype at the time, with other early YouTubers who were just obsessed with it, right? So forming some sort of like mastermind style group chat with other people in your niche is super important. And yeah, I would just recommend investing in it now. I'm actually launching a service called Megaphone. Megaphone.network is the website, where anyone can get access to this type of growth, right? So a lot of these big creators, they only work with other big creators. They hype each other up because they all have big audiences. Megaphone is a way for anyone who's early stage with their startup, maybe early with their personal brand, whatever it might be, to get amplified by these big creators. So it's a new service I'm launching just to help founders.
Yeah, no, and I'm glad you took the bait there, because that was exactly what I was trying to lead you into, because I knew that was something that you just announced. I think I was on the waiting list for that to kind of check it out and have a follow-up call where we could dive a little bit more into that. But I guess why not? Let's go ahead and talk about how founders can potentially leverage this, or the strategy you mentioned, like the hard work of building real relationships and using that to kind of share, followers, subscribers, and, ideally mutual audiences to mutually benefit each other. It's hard work. And, it's not something that just comes easy, especially if you're just going to cold email someone that may be bigger than you, then what kind of value you bring to the table. So it'd be interesting to kind of have you share a little bit of the, recommendations or strategies and or how people could leverage, your new tool.
Yeah, I mean, when it comes to like what I would recommend on the like entirely organic side, for me, it doesn't feel like a ton of work because I'm just interested in what these people are putting out there, right? I'm interested in learning about their processes. I'm interested in growing my own, creator processes as well. But yeah, I think it's just being super authentic, right? Like, if you have a smaller audience than someone, go comment on their threads. If you do that within the first hour or so of them posting it, they'll see it. And, whether they reply every time or not, they'll see your profile picture, they'll see your name, you'll be in their heads. And then down the line, after you've built that up a little bit, when you go to message them and ask to form a relationship, they'll be aware of who you are and you want to just be some random person on Twitter. As far as Megaphone though, it's super simple. It's just a SaaS fee per month. It's $99 a month for access, or $89 per account per month if you do more than one account. And basically you share URLs with us for content that you post. We grab that, we route that to the right creators in our system. And then based on what you've deposited, additionally, you pay out those creators directly. Creators send their own rates. We take 0% of your deposits. Early success stories have been crazy. We've had threads go up to 1.6 million impressions already, just from someone with a couple thousand followers on Twitter. We've had someone grow a LinkedIn page from 0 to 2,500 followers in 24 hours, which is nuts.
Wait, so just say that number one more time. 0 to what?
0 to 2,500 followers in 24 hours on LinkedIn. So these are just a couple early successes that we're having. It works. It's how I've grown my following, and excited to share it with other people as well.
No, that's awesome. We'll have a follow-up call after this.
Yeah, we should.
So something I want to point out, we've been talking a lot about engaging the founder community, which obviously is both our worlds, but there's something that's incredibly valuable about at least the strategies that are being talked about that are very applicable to other industries. And this dates me way back, but when I was I used to run like a small business, and I was in a completely different industry. Not in the startup world at all, local community type stuff, but I was using these same practices of getting into trade shows that were specific to our verticals and like finding who the influencers were. I think this is like 2013, 2012 when I had to do this. But even at previous companies, in the esports and education space not too long ago, I would look at who were the influencers in this particular space, who are my customers, and how can I get in front of influencers that are my prospective customers and build that relationship with them. And at least for me in education and esports, it was all like in-person trade shows and all that kind of stuff pre COVID, and then coming out of COVID. But that experience is very applicable to what you're sharing here and what founders should take into consideration when it comes to growing the personal brand, and but looking at it from their niche and their target audience. Everything you shared here is 100% applicable to apply to basically any industry. It's just maybe not be as glamorous or sexy as like the VC startup world, but that's just because we're in it. This is our little tiny niche. We're actually insignificant in the grander scheme of things. Like there's way bigger niches. But being that
I even saw an interesting post from a friend of mine. Jay Klaus runs a great business called Creator Science. A good friend of mine. He made a post the other day that was like, I actually think that the startup / entrepreneur niche is a tough one because folks are really highly discerning and also don't have a lot of time and also are often undercapitalized, at least for like, paying creators and that type of thing. But I think what I said back to that was, something I believe strongly, which is that if you have credibility and if you've shown that you know how to make things happen and know how to make, impact, then it's actually a really good niche. But if you don't, it becomes a lot tougher. So I think there's that dichotomy there. Folks like you and I, we've done a lot, and so we're able to build in the space.
Yeah, no, I agree with that, and I think it's Going back to the topic of the podcast, fundraising and whatnot. You you launch this product. It's sounds maybe geared more towards founders, and that's your community at this point. But like we're just talking about, this type of megaphone strategy is applicable to just about any industry.
Yeah,
you've leveraged your existing audience, your newsletter, to kind of get this off the ground, has some early successes. Let's talk about, is this something you're going to raise capital for, or is this something you're going to continue to take as far as you can?
Definitely no plans to raise right now. I think we're able to grow it as it is. It's still early. Company's like 3 weeks old. Not even a company, it's a product. It's like 3 weeks old. But able to grow it with what we're bringing in from the newsletter business right now. So not looking to raise anything. But it's totally applicable to other industries. I think I'm a big believer in like build the skateboard, then build the bike, then build the motorcycle, then build the car. So for now, I'm focused on building, whether it's the skateboard or the bike or one of these early stage things, just focused on my niche. If we get traction, if we get repeatable growth channels that can scale, then obviously we'll take that to other niches and expand it. We already have creators in tons of niches on that side because startup founders want to reach audiences in different niches. But as far as who we're targeting, we found that like startup founders and ghostwriting agencies are our early customers.
Awesome. Well, good to hear. And I think that's a theme I'm starting to see more and more of, especially on this podcast. I think you're now 3 or 4 founders I've spoken to on this podcast that have raised venture capital before, and sizable sums, 10, 20 million plus, and have come out on the other side being like, I don't want to do that again, or at least I will go as far as I can without having to do that. And just curious as far as what advice you would share to founders that are kind of at that stage where they have product, they have maybe some revenue. What advice would you give them at this point?
Yeah, definitely no qualms with raising. I think raising is something that is often the only thing you can do, right? If the business is going after a big market that other people are very aware of, or a competitive market, and you need to go really fast, then, venture is obviously the way to go. It's just an accelerant. But if that's not the case, if you can build the business on your own, then, I think there's merit to that too. And so for me, I would say raise if you feel you need to in order to hit your goals, right? If you need to grow fast in order to capture density in the market and therefore survive, that's a great reason to raise venture, rather than just like assuming default from day one. Oh yeah, I need to be $1 billion company. Maybe you will, but I don't know if you want to say that you need to, because it puts you on a path where the only way to succeed and the only way to get a return from the company is if you hit that $1 billion outcome and you can return the entire fund of all your investors, right? Yeah. So it's not always the right path.
Yeah, it's an incredibly arduous journey for many company or many founders, and again, highly appropriate for many. But for the majority, it's look at how you might be able to get the business to generate free cash flow, as opposed to having to raise venture, and what those options are. But
I think Sam Lesson from The Information posted a really, really interesting, made a really interesting post about this, where he was saying that, during the 2010s, venture was able to take more shots on goal that would have some return that would impact whether the fund was successful or not. And because less capital is going into venture, and because software is less of a differentiator and a few other things, it's now more than ever like an all or nothing type bet. And I think that's what we're seeing founders sort of implicitly realize as well. It's not just that founders are waking up to something, it's that things are actually changing a little bit in the structure of these capital markets.
Yeah, no, and it has been a very tough market. And that's what I help navigate for founders, is just kind of figuring out what's realistic for them. And I talk to many founders where I'm just like, get to cash flow. Don't try to raise, capital. You could have a very good business. That same thing with, having 50K a month in revenue and having, that's a great outcome for most, most people. And that's something that I think a lot of founders, can look at in terms of the value of building an audience before necessarily building or launching a product, and what that enables you to do otherwise. And building an audience, you found a way to do it very quickly, and cost you some money, and you have some resources to do so. But there's a lot of people that had no resources. It takes a little bit more time, a little bit more grind, but you can have a similar outcome. And something I encourage founders to do. So, with that said, I've really enjoyed having you on the show, Michael. What's the best way for founders to either learn about you, reach out to you, or potentially join your community?
Yeah, absolutely. It's been great, man. Thanks for having me on. So if folks want to follow along, join the community, you can go to join.houck.news and get started there. I also spend a lot of time, too much time on Twitter at callmehouck. And my last name is Houck. So that's how it's spelled. So that's where people can find me.
Awesome. Well, we'll make sure to have all those linked into the description as well. What was the Megaphone app? What's the best way to start?
That's just megaphone.network.
Megaphone.network. Gotcha. Hey, any final parting words that you would like to share with founders listening right now?
No, man. I think it's a very interesting time to be a founder. I think for me, look for moats, look for things you can defend if you're going to go big, right? That means data, that means hard tech, that means, bio, that means all sorts of different stuff. It doesn't necessarily mean software anymore. I think by the end of this decade, we're going to see that, there's fewer and fewer software companies that reach, billion-dollar status or higher, because it's just easier to build software than ever before, less of a differentiator.
Oh, I don't know if we can end the podcast on that. I feel like I got to open up that statement there, because I'm actually in a general sentiment or agreement in that general sentiment of software, especially with the whole AI craze, has become so incredibly low cost to build high value products that it's going to become immensely competitive. And similar to what you see, like, I've already seen examples of this in like sales software solutions, like cold outreach or, anything that's sales marketing related. I'm seeing a million products being marketed right now at the $10 to $200 a month range that all could, again, be great small businesses, but are going to have a really hard time building a moat and raising capital. And, hence some of the advice that I share with founders in terms of getting to cash flow as opposed to expecting capital to come in.
Yeah, you really have to be going after something unique. Like I'm looking at the space industry, I'm looking at the energy industry. Obviously, the superconductor news that just came out is incredibly interesting. All these in IRL breakthroughs are I think where the smart money is going to be going.
Well said. Good input. Sounds like a fund might be on the horizon. I guess.
We'll see, man. Maybe the newsletter community turns into an accelerator or a fund someday. Maybe it turns into a media company. I don't know. We'll see where it goes.
Either way. But hey, Michael, I really appreciate you joining the show. Look forward to getting this out to our community. Thanks for listening to today's podcast. We hope you learned something valuable. And if you did, be sure to let us know in the comments or by hitting that like button. If you're a founder looking to raise capital, be sure to check out our platform, thunder.vc, to use our AI to identify which investors are most qualified to invest in your business. It's free to join. Just go to thunder.vc. Again, that is thunder.vc. And if you're new, we release new episodes every week. And if you or someone you know recently raised a round and want to share your story, be sure to email me at jason@thunder.vc. That's our show, and we hope to see you next week.